All right, guys, I think we're all set up now here. Welcome aboard to the market recap for the week. My name is Carlos Garcia, founder and CEO of GAR Capital. I didn't do it on Friday. We had a tornado warning coming in on Friday, so pretty ugly weather happening in Florida. Pretty much this whole weekend, just downpour, torrential downpour here in Central Florida. So I didn't want to record a video and then the lights go out or something. So again, I decided to take the day on Friday, enjoy a drink or two, maybe three, and then skip on Saturday, enjoy the day off, kind of rest my mind, come back fresh. It's so important as a trader, guys, to take some time away from the screen. Extremely important. Been doing this now since 2014. Your eyes just pretty much glaze over. It just comes to the point that, your mind is so mush that, after every week, I'm absolutely mentally drained, but it's worth it. It just takes that drive and that dedication to want to do this every day to be successful. So it is important to take some time off the screens, guys. Trust me. If not, it becomes to the point that it's like a chore and then you don't want to do it. And then you just get tired and then the fatigue comes in one way or another. I'd rather you be in control of your own fatigue than your body or your mind does. It just quits on you. But either way, it is Sunday, April 30th, new month tomorrow, back at it tomorrow. So I want to go over the week. I want to go over the month. I want to go over the charts and a couple of names from our watch list this week that we can take a look at. So first off, let's go ahead and go over the actual stock market week. How's that? So let's kind of go to our friends here at S&P 500. We'll go to the markets here for the week. Take a look at this here. So here is the last 5 days on the stock market. NASDAQ was up about 2%, 1.89%. S&P up about 0.87%. The Dow pretty much neck and neck with the S&P the past 5 days, and IWM being the weakest of the bunch. Again, First Republic Bank, the bank's taking a hit, down about 1.33%. Let's take a look at the 1 month. The Dow is up about 5%, S&P up about 4.83%, NASDAQ up about 4.82%. That's for the last month. That may be incorrect just for the fact that the cutoff time, at least here, is the 27th. So we may have to take a look at that on Monday. In terms of year to date, the NASDAQ is in a bull market, 21.08%. Again, 20% off the lows, more than 20% off the lows from October. S&P 500, about 8.59%. We're getting close to the actual 20% mark from the lows. It's getting pretty close to the, from the bottom in October to a 20% gain, which would be considered a bull market. The Dow up 2.87% year to date, and the IWM is actually flat. So how about that? Even with all this nonsense going on, all this craziness with the banks, it's now up 0.85%. So again, that's our week. That's quarter to date in terms of the market. Let's go ahead and start with our week as well. Here is the week here. 4 for 4. We had Amazon 110 calls. That took a while to get. We got that on Thursday. I closed at 20%. It got in the money, 40% profit, but I took it for 20. I left a runner for Friday. It did not work out for me, obviously, with that pop and then that drop. So that's okay. I mean, the most important is that the guys got it. The team got it. AMD, 184% in terms of runners. That's how long I held. There is a screenshot of that. I'll get you everything so you guys can see it. So let's go ahead and make sure that you guys actually see the setups here. So let's go over Amazon. Where's Amazon? Amazon did hit 40, so you guys can see it. You could see it here, the two positions. Here you go. I took it for 20%. Again, I had two contracts, 20.5%, and then 40% hit on my runner. But again, I held it, so not a big deal. I took a hit on it, but again, those are runners for you. There's some risk on there, obviously, pre-market. AMD, we did the 86 puts, dollar in, 140 out, 40%, hit 184% deep in the money. And let's see here on AMD, it was actually 182%. I had the contract here, one runner, the 86 puts. The 86 puts, I could show you here is where we got 40%. You could see it right there, $205 profit. $200 here, $205. You can see 5 contracts, 41%. Well done, team. Tesla, we had puts as well. Let's take a look at that. So Tesla, I actually filled last week. So my entry, you could see, was 128. the entry for the team was at 104. So they actually had a better gain than I did. But again, I got as high as 35%. I tracked it, it hit 40, 53% on the runner. So well done on Tesla. You can see it one more time here. Again, my fill was terrible, $1.28 last week. But you could see the price hit 173, which is way above the exit price, but I wanted to show the 40%. So again, you could see 173. The team got around 70% as high as the runner. So I have to fix that. I think it was 70% here. I put 53 based on my runner, based on what I had. So just want to make sure of that. Here we go. And again, this is the Discord channel. Let's go ahead and expand this up a little bit. And then the Amazon call, the Microsoft calls. Here we go. The Microsoft calls, I told them 20%, take that snack. You can see my entry was $1.88, just like the team. 224 was the price, and you can see 20% there. But again, I held on to it, and I got as high as 90 on this one. You could see right here, 93% full position. I didn't take a runner. I just wanted to hold it for next week. Again, the most important thing is that the team get it. Does the team get it? That's all that matters. Do you guys get paid? Forget what I make. It doesn't matter. That doesn't help you. Do you make money? That's what we were talking about here in the Signal Group. April, again, let's go over it here rather quickly. 3 losses, 14 wins. 14 out of 17 gets us about 82%. Well done to the team. Again, I set it up pretty simply as $500 per risk per trade. And a lot of people are like, well, can you go by, your statement? And again, the statement on Robinhood absolutely is awful. I tried it. It looks like crap. So again, what I did was $500 risk per trade, which is I usually do. And then I just put the numbers in based on the signals. And again, Robinhood, guys, you cannot demo Robinhood. You can't fake the funk. You see the screenshots right there. I walk with you the whole way. I have to go ahead and actually add this gain here. This is about $100. Again, puts us about 11% for the month. That's still beating the S&P in a month-to-date format, and it is better than the NASDAQ in terms of month-to-date. So better than the Dow, the S&P, NASDAQ, and IWM. But again, $500 risk per trade. Again, know what you're doing. Keep it tight. Keep it simple. The meta trade, I did not put that fill there. So let's go ahead and take a look at that meta trade together. The good news about the screenshots, it gives us an opportunity on Discord to take a look at everything we have. It's kind of like our own little trading journal. So again, let's take a look at April 13th here, the 225 calls. Let's go to it. April 13th. We'll screw up. Sorry, my phone was ringing. Let me see here. Let me cancel this. Just text him back. My apologies. Let's go to Meta. Meta is here. Got to scroll up a little bit. That's Boeing. What was the date? The 12th? Let's see it. The 12th. Takes a little bit of scrolling up here. So here we go. We're getting pretty close. Meta, here we go. Here's the exit, $2.52, 30%. I said 37%, but again, I laddered. So again, we could put 252 there. I added extra contracts on the pullback. So again, it still got 40, but again, minus 252. See the difference in price in terms of making that. I actually gained $298, but I'll put on the screen here 200 because I didn't signal to ladder that thing. I didn't want to put that much risk on the board. So for you guys. So there we go. That's our week. Well done to the team. About 11% gain if you were trading it. So let's go ahead and keep it going for the next month. It's the second month of the quarter. So that's done with. Let's go ahead and go over the week, the expectations for the week, and go from there. So let's go to the weekly chart on the S&P 500 futures. You can see we're getting close to that 100-week moving average. I talked about that ad nauseum. And again, we've rejected that back in January, rejected in February, rejected into December, rejected in September. Only time we broke above it was in August. And again, that's kind of the target for the year-to-date target at the end of the day, if we can get to 4,300. But again, we need to break here, 4,205. Until then, it's really just a holding pattern, unless we expect a complete breakout, which is fine if that's what we expect. But we have the FOMC on Wednesday. We also have Apple on Thursday in terms of earnings. So that's where we are in terms of S&P. If we're just doing purely Fibonacci levels, 42.44 is your next target. The high that we've had recently in terms of the market since February was really that level there around 42.07. So I'm going to place that alert there because we have Sunday futures opening up. Let's go and take a look at NASDAQ since that's the one everyone is keeping an eye on. 13,626 is your 50% retracement level. We're still not even there. Look how much we've fallen on the NASDAQ. Again, complete straight shot breaking out. We want to get to 13,626. That is your 50% retracement as long as we can get on the right side of that. In comparison to the S&P 500, You could see here on the daily. See, where's the 2-year daily? Let's go to the weekly. So my Fibonacci levels are a little different because I expanded it all the way from the COVID bottom. So let's go ahead and remove this, and then we'll do a Fibonacci level together based on the just last year, last 12 months, excuse me. So let's go ahead and add to drawing tools. We're gonna go to the percentage sign. That's your Fibonacci retracements. Everyone's different. People say, oh, bottom up, top bottom. It really is the same thing. It doesn't matter. But again, everyone's different on that end. I go from the bottom up. So you can see here, 100% retracement back to the lows. We are now above the 50% retracement. If the S&P 500 is our leading indicator, that means that NASDAQ will break above the 50% retracement as well. 4,300 will get you around the 38.2. That is absolutely huge. That'll get us back to August and near April levels on the S&P 500. So let's go over the week coming up together. Let's see here. Sorry about that. We're going to go to next week. We'll expand a little bit. Let's go ahead and open this up here a little more. There we go. All right. So Monday at 10 a.m., we have ISM Manufacturing PMI. We have the JOLTS job openings on Tuesday. We have ADP private payrolls on Wednesday. ISM services on Wednesday as well, 10 a.m. FOMC statement. Again, the Fed planning to increase rates 25 basis points on Wednesday the 3rd at 2 p.m. and then 2:30 is the press conference. Thursday, we have unemployment claims, and then NFP, non-farm payroll report on Friday. So we got a lot to go over in terms of the market this week. How fun, NFP, FOMC. Ooh, it's going to be a doozy. It's going to be another gauntlet week. Last week was very, very choppy, as we know, other than the last couple of days. But well done. We're going to be prepped correctly. And even with that chop, we did very, very excellent. So I'm very content about that. Now the idea is just to keep it moving forward. Let's take a look at the earnings calendar coming up. This is from Earnings Whispers. This is on our Discord channel, and I also post it on Instagram. You can see that we have AMD on Tuesday. This is the ones I'm standing out here. AMD on Tuesday. We have Qualcomm on Wednesday. Again, that's semiconductors. Thursday, Shopify and Apple. Kind of the big ones. Apple being the huge one. DraftKings being another one. Block, which is Square. DraftKings being another. We trade DraftKings sometimes. So these are the names that we're going to be watching for. So again, keep that in the back of your pocket that you know that we're going to have earnings coming up soon. So we know what happened with Amazon. We know what happened with Microsoft. We know what happened with Meta. It could happen any way possible. So that's where we are for the week. In terms of the S&P 500, what I think, there's so much going on. It's really tough to predict what can happen. So again, we could get that breakout based on a great NFP number, possibly. We can get that break on a better than expected Apple number. We can get that on a more dovish Fed, and we could tank on the other side on a bad Apple's earning, bad on non-farm payroll report, maybe stronger than expected, and a very hawkish FOMC. So you're really in between. This is why we don't have any risk going into next week. We're going to observe on Monday and see what we get. Maybe we get that pop into Monday. Maybe we break out finally Sunday morning in terms of Sunday afternoon in terms of futures. It really just depends on what the expectations are. How short are people? How long are people? How about put call ratios? Are they too elevated? Are they too low? So just so much going on. Let's go over a couple of names on the watch list that we can go over. I'm going to go over two of them together. A couple of them I'm going to send out here, and then Nick will send out the rest later today. So let's go over XOM. Here's XOM. Here's a name that I have been watching for a while. XOM above 120. Again, that's pretty much a multi-decade high. The last time we got near those levels was right around 2008, 2009 at around 117 XOM. If we do break above 120, we're going to keep an eye for some calls. If we're looking to see a rejection, well, we got that covered too. We're looking below 113.20. There's a gap to fill here at 110.26. So XOM is definitely on the radar. Maybe oil weakens if we get a stronger, firmer dollar with a hawkish Fed. And if they get a weaker Fed, we're not weaker, a dovish Fed, then the dollar would sink continuously a little more. And then we'd see oil pop, because that's a commodity based on dollars. XOM goes higher. So XOM, again, above 120.01, we'll be looking at some calls, maybe something close to the money, 121, 122. And if we break below 113.20, we'll take a look at the 110, 111 calls for that gap fill on the daily. Very simple stuff. Let's take a look at crude together. You could see that we did bounce off that 75 support, guys. Nothing to do here on oil until you get above 85.23, that yellow line. Until that breaks and the dollar weakens, oil isn't to be touched, at least in my opinion. And if we break below, let's see if I have a couple of alerts here. Yeah, let's see if we can move this alert here to around $100, 100.8 on the Dixie. Again, we keep hanging around, and we rejected the 20-day moving average. That's a momentum indicator. Remember, we talked about that death cross on in January on the dollar. So again, it's been pretty ugly since. The dollar continues to go down. Make sure you'll keep a look at cryptocurrency. Keep a look at Bitcoin and Ethereum. That means we could play Coinbase. That means we could play Mara. That means we could play Riot. That means we could play commodities. FCX. This is Freeport-McMoRan. That's copper. We could do oils. We could do natural gas. Natural gas, not so much in terms of options, but the oil companies, like an XOM, we're going to keep an eye on that if the dollar continues to sink. FOMC, you better believe the dollar will have some kind of reaction on Wednesday. So we're going to keep an eye on it. One more to go. We'll do Apple. Why not? Apple reports this week. We do have a gap to fill here right around 170.110. I personally filled Apple last week and I got chopped to death. I didn't signal that. It was just me on my own. I was playing the breakout and I got there a little too early, which is completely fine. And that happens. 171.14 is the level. I have an alert at 170.05. I'll play that gap fill to 171. Maybe we'll do the 172.50s, play the run up into earnings, and then we'll sell it ahead like we did on Amazon. Apple being the one. And again, if you're looking for some downward action on Apple, maybe you get the rejection of that 78.6 fib. Here's your target zone. It's right here, the 20-day to around this trend line. So again, 165 to around 163.31. We'll call it 163. That's kind of your sweet spot if you're expecting a rejection. But again, if you're expecting continuation, there is the gap fill at 171.25. I'll do 172.50 calls if that's the case, if we break above 170. And then we just play up the running into the run up to the earnings on Thursday. So again, we'll get some time. We'll definitely get some IV. We'll get some actual demand on our contracts. Pricing may be a little off. So let's see how we open before we do anything. But Apple and XOM are two names I'll be watching. That's two part of the watch list. The rest will be on the Discord server. If you are interested in joining, here is the website, gar.capital. Again, gar.capital. There is no .com after that. Everything is here for you guys. Any kind of questions, feel free to DM us on Instagram or type on the actual commentary box here on YouTube if you haven't already. We'd love to answer your questions here as well. So Apple, ExxonMobil, that's what we're looking at. Let's keep an eye on 10-year Treasury yields. You can see that gap fill here at 31.43. We already know the 10-year Treasury yield and all the bond yields will definitely be affected by the Fed. So we're going to keep an eye on this one. In terms of actual levels to break, that's really it, 31.43. It's not like I'm going to play TLT or anything on this one, especially on a Fed day. But if we break above 109.79, 110 level on TLT, that's the 20-year bond fund, then we're going to start seeing yields really accelerate to the downside. Let's take a look. The last thing here, the volatility index, the VIX is absolutely getting mashed. Lowest level that we have seen really since, wow, November of 2021. How about that? Well, let's say anything around there. Yeah, November 2021. And that level was right around $14.92. Now you have the Fed on Wednesday. You also have Apple. Buy insurance when you can, not when you have to. Again, if you're looking for some portfolio protection, it is the cheapest it has been since November. And then what happened in December? We spiked up. So again, it feels like we're coiling a little bit. We're getting into this seasonally weak May. I'm going to keep an eye on some VIX calls. Juan is the one that's all about VIX. So again, if you're interested in more about VIX products and how to trade it, Juan C. GAR Capital at Instagram. Juan C. GAR Capital. That is the VIX master. He loves to trade VIX. So we'll talk about VXX and VIX possibly this week. If we get a shot, we'll go to VXX real quick. This is the iPath VXX, and you can see just a complete breakdown in volatility. You can see on the hourly just continuing to mash down. But how cheap would it be here to buy some here at the absolute lows, right? That's VXX for you. And you could see pretty much since the peak of inflation how much it has tanked VXX. But again, it's a good product to possibly trade. There is a gap to fill here around 40.92. So I'll keep an eye on that. If we break above, let's see. Again, if you're looking for some, well, to be fair, guys, if you're looking for some actual equity protection or some portfolio protection, you're buying some VXX. Really, if you're looking at the technical analysis, it really doesn't matter. just for the simple fact that, if we do get some volatility, it's going to spike up anyways, regardless of what you have in terms of your technical analysis. So again, if you're looking at some portfolio protection, SPY puts, VXX calls. I think SPY puts are a little better, but VXX isn't bad, or buying the VIX itself. Again, it is just an insurance product, the way to do it. So again, we have PMIs, we have Apple earnings. We also have more earnings other than that, AMD, DraftKings, all those names. And then we have the Fed and we have NFP. So big week. We hope that you guys join us for that week. Again, if you are interested, gar.capital is the website. There is no .com. Feel free to follow us on Twitter. All free. All news is free. I tweet everything for you guys at GAR Capital, and make sure to follow us on Instagram at GAR Capital as well. And make sure to hit that subscribe button if you love these videos. Went over a couple of things today. Last little bit, made this hat at Lids. If you guys do like it, you can see that I have a hat here. This is actually a New Era cap. See, New Era, like the ones they wear in the MLB. I love the way it came out. Maybe we'll do some kind of giveaway or so, but I had to have it made at Lids to make it happen. So if you are interested, comment on the comment box below for a giveaway for one of the hats, and we'll see if we can get one out to you. Comment if you guys are interested, and then we'll do some kind of giveaway or something like that if you guys would like a hat. I would love to send you guys one. Have a great rest of your weekend. I will catch you guys on Monday for the morning note. Have a great rest of your weekend. We'll see you then. Cheers.